Here is the breakdown of 7-Eleven selling Caring Pharmaceuticals. As a disclaimer, we do own some shares mentioned on the slides. Hey guys, if you're interested in building a 6 to 7 figure portfolio using the power of stock investing, head over to the comment section or the description to sign up for our free masterclass so that we share with you exactly how we do it. Now, last week, 7-Eleven announced that they will be getting rid or selling their stake in Caring Pharmaceutical. And, market reacted quite positively. And then as of this recording, 24th of July, not so positively. You can see overall 7-Eleven is a company that hasn't really done too well. I guess you could say slightly better than the KLCI. But basically it's, not even 40% over the past 5 years, and the price has been very volatile. I think a lot of people do not like the association the company has with Tan Sri Vincent. That's not my view. That's just what I think the market is thinking. And it's a nearly $2.5 billion company. But yeah, give us the breakdown.
Yeah, so recently they just announced on Bursa that they're going to be selling about 75% stake in Caring. That is the total amount of shares or stake that they have inside this Caring Pharmacy Group, and they're selling it for 637.5 million. The remaining 25% is actually owned by the Caring owners and also Credo and and all the remaining one. Sorry, not Credo, the Caring founders. Yeah, and then there's also another source that says that Caring was the third highest bidder. So there's actually two companies that is bidding for the.
You mean Big is the highest bidder?
Big. Sorry.
Right.
Big Caring. Yeah, sorry. It's quite confusing name. But yeah, the Big Pharmacy was the third highest bidder for Caring. So there's actually another one, which is Carlyle and also Carlyle and also CVC Capital. But then what's interesting is that Carlyle actually previously they made an offer about 1.3 billion. But then 7-Eleven turned down because they are looking more 2 billion, so 2 billion to 5 billion more.
This was last year, right?
Last year,
October.
Yeah, correct. 2021, 2022 at that period. But then 7-Eleven just turned down, and right now they're actually
That's just weird.
selling it for 900 million. Yeah, which is actually very interesting. Because there's a 50% discount, and also another thing is that Big Pharmacy is planning to go for an IPO.
That's interesting.
Yeah, I mean, Big Pharmacy is kind of like directly owned by Credo. Not sure it's Credo's subsidiary or which subsidiary, but then yeah, I mean, as you know, Credo helped Mr. DIY and also CTOS to list.
That's very
so it's gonna be
weird.
a pretty
Right.
It's pretty interesting. I'm not sure whether Tan Sri Vincent is getting some sort of a deal outside of
maybe he
here.
gets shares in Big Pharmacy, who knows?
Could be also. Yeah, could be. But the 50% cut is still quite shocking. And that's the reason why it dropped 10% after they announced. Yeah. So there was a buying spree in the past 1 month. You can see that there's a lot of all these names who are actually the substantial shareholder of the Berjaya Group. Sorry, is it Berjaya Group? Sorry, SEM, the SEM 7-Eleven share price. That's why they kind of anticipated that this deal has actually done. That's why they have been actively acquiring. And also there was a halt in the 7-Eleven share last week. I believe it was last Friday. Yeah, last Friday or last Thursday that they actually halt the trading for this company. But then once they release, right, the market didn't really like this 900 million disposal.
Yeah, it's very weird.
Yeah, and so this is the final comment. We don't know why there's a 50% discount from 1.8 billion to 900 million. It could be market sentiment. It could be that there's another deal. But then we as a public or as a third party, we don't know how or why did this deal even manage to go through. But then this is a Credo's offer to Berjaya Group. So you need to know whether is Credo is going to give something to...
This is very odd, right? More research is required, but I think that unless Tan Sri Vincent was forced to sell or something like that, definitely the benefit that he's getting is way more than 900 million, especially when just less than a year prior, you got a an offer that was double the amount that was sold.
If I recall, they actually bought Caring for 550 million.
Okay.
In 2019. So in 4 years, they only like make 70 to 80%
Yeah,
gains.
which is decent, to be fair.
Yeah.
Not too bad.
It's okay. But then the expected money that they wanted for versus now is kind of like very far-fetched. So that's something to ponder.
But guys, before we move on, if you're someone looking to level up their stock investing skills and you need a lot more guidance, we do have a one-on-one program called the Mentorship Program. If you're interested, you can apply it in the comment section or the description.
Okay, the next one is tech is gone.
Yeah, so just a week ago, we were saying how Elon Musk has revived the tech market in Malaysia.
Yeah.
But now it's not so good. A lot of it is led by TSMC. TSMC is not doing too well, at least the past 5 days, down about 5%. And what's the reason?
Yeah, well, they actually announced a revenue beat in their recent quarterly earnings, but then they kind of like gave a very gloomy prospect or outlook for the semiconductor space because they think that they're still very uncertain on the AI's demand. That's what they say, and they kind of like projected that there will be a 10% decline in revenue in the next few quarters. So they already warn you that they're going to be reporting bad numbers. So the announcement from TSMC actually resulted a lot of tech companies, actually not only a lot, but these three main one that was down like 12% to even like 8% in just a span of 5 days. So you can see like Opstar, EP Manufacturing, and obviously Frontcan also was down. Frontcan, it's a kind of like a working directly with TSMC. So yeah, and previously we did mention that tech was back because of Elon. Now because of TSMC's gloomy outlook, now we're back.
Yeah, it just goes to show, right, how a lot of the stock market is really driven by short-term sentiment.
Yeah.
It's the mood, right? And the thing is, you have to understand for most companies, especially large companies, when they give earnings guidance, they always want to be more conservative. They always want to say like it's not that great or anything. And the reason is because, well, first of all, why do they need to lie? A lot of them, they don't need to lie. The second thing is, or rather lie upwards. They might lie downwards, meaning they'll say things that are worse than it actually is. And the reason is because it will always make them look good. If you always revise or you be very conservative in your earnings guidance, you will always beat the expectations.
And also I believe TSMC did mention something about their inventory adjustment. They are being very careful about it. They don't want to spend too aggressively. There's going to be like a very conservative spending in terms of their capex as well. I mean, I think you mentioned this in the last webinar.
This is one of the biggest things that's happening is that the US PMI, which is a leading indicator for manufacturing in the US, it's really declining. It's already contracting over the past, if my eyeball is right, 2 to 3 months. Not a good sign. Always about 6 to 9 months ahead of the market. In fact, the rise in the stock market over the past few months, let's call it, especially in July, can be explained here, right? You can see.
Yep.
So yeah, that's the PMI for the US, and of course, but China is doing a little bit better. So a little bit about balance. Not sure if we put Taiwan's one here.
No.
But then Taiwan's PMI is basically TSMC, usually. But yeah.
Okay, cool. But so this is the final comment, whether this tech rebound is just temporary, because now we are seeing a bad outlook from the largest semiconductor player in Taiwan. And it's also a major player for like that help Apple and all those big names to do their products. I believe also they are kind of like trying their best to ramp up or to improve the yield rate for the 3 nanometer chip. Because Apple's next iPhone 15 series need this 3 nano chip.
Okay.
But then right now the yield rate is about 55%. And they are trying to bump that number up to 70%.
Which is probably their more historical norm.
Yeah, but then they don't expect that to happen very soon. So they say like maybe another 6 to 7 more quarters of doing it. Maybe they can
6
help.
to 7 more quarters.
Yeah.
Wow, so that's 20
like,
months.
Yeah, so they are going to see around like 2024 or maybe 2025 to start to see like some yield improvement, yield improvement. So there's still quite a lot of like R&D and also capex that needs to be spent from them. But then they are still kind of like conservative because they cannot like satisfy Apple's quick demand for this 3 nanometer to actually launch, because Apple's product is always every year, right? Like new product, iPhone 14 was like, I don't know, I think it was like last year or last year. Then now we're gonna have
iPhone 12, which is the one that I'm having now, is 2021. So 13 will be in 2022. 14 will be this year.
14 Pro and everything also will be this year. But then next year already, they're planning for next year, which is iPhone 15. So yeah, I mean, there's a lot of things that needs to be done from them.
What is interesting is that they feel that AI is still uncertain. That is very unique. And it goes to show you that I think the higher up the AI supply chain, which is where NVIDIA is, right? So you can see that NVIDIA is the one that had a good Q3. That's where AI is benefiting, because if you think about it, you need all this capacity to experiment. But then when you go downstream into, maybe user and all that, it requires a lot more complexity. It requires a lot more experimentation to see which AI works better, right, for the consumer and things like that. So it will not be as quick. Whereas for NVIDIA, they are the equivalent of selling, if I can use an analogy, right? They're selling the shovels to gold miners or pickaxe, right? So whatever the gold miner does with the gold, it doesn't really matter to NVIDIA. Yeah. They're just sending, right? These are their GPU chips and all that. Then of course, when the gold miner gets the gold and then the person who gets the gold, what do they do with it? We don't know, right? If we melt the gold and make it look like a horse, will people accept it? If we melt it and make more necklaces, will people more necklaces or bracelets? I don't know, right? So it's a lot more complicated, and that's why you are probably that's probably where TSMC is, and we all know that TSMC is more linked to consumer electronics. Yeah, right. We know that iPhones, whatever. And so they are, just maybe some insights.
Yeah, and also I believe TSMC has a very small revenue contribution actually have to do with those GPU, CPU and everything.
Very small, okay.
It's very, very small only. Yeah. But it's projected to grow like 60% growth every year. Yeah, okay. But it's a small one. So yeah, this is just the final comment. CapEx spending is still indecisive. Everybody is kind of like going to be suffering. That's what they... and most analysts also projected is like quarter 3 2023 is going to be bad, but NVIDIA is still going to be strong. Yeah. So that's only about it. And then another one is the last comment, which is very interesting, which is Chinese recovery, because even though they have opened up, so far things have not really been picking up for some reason. I'm not sure, is it because to do with the insider, I don't know, political stuff or whatsoever. But then, yeah, I mean, we kind of like put a lot of high hopes in the demand to pan up after they are reopening. Like everything business is going to be good, but then business looks flattish and nothing interesting. So so that's about it for today's video. And before you guys go, this
we have a very
FIRL Pro
special offer for people who watch all the way until the end of this video.
Yeah.
Okay. Our signature program, FIRL Pro, designed for people who want to shortcut their journey to find potential investments. 33% off only if you watch all the way until this end. So if you want the promo code, we can pass it to you. Just email us, to hello@firl.co. You can see it on the screen. To get the code. We've done pretty decent over the past 10 months or so, and we're looking to improve. As we go.
Next week there will be July's performance. For the FIRL Pro, so you'll be excited to see how
we have 3 more companies coming up as well.
Yes, exactly. Yeah, and if you want more juice or you want more insights on FIRL Pro, but you still not convinced yet, you can actually check out our free sample. The links for this free sample will be in the description and comments down below. That's about it for today's video. Again, hope you guys enjoyed throughout this TWIB series. If you like it, make sure you smash the like and subscribe button, and we'll see you in the next video.
Bye-bye.